So what is next? Next is this candle here, this strong candle that is printed right now, right? This is what I want to trade. This is this candle, this right here, yeah, this one, okay? So typically what I'll do is I'll draw a box around both the previous 15-minute, the prime candle, and the echo candle. And once the prime is finished, I'm looking for my zone. My zone was very clear. Now look at this price action versus looking at the previous price action. What is cleaner? What is structure telling me? The structure is telling me very clearly that I'm going higher, 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 and then it shifts immediately. So this obviously was weak because it could not print a higher high. It got taken out. This was the strong low, which printed this high, and it is now coming back into it, and you have that reaction, right? So once that reaction happens, it printed a new lower low. So this demand is done, right? So we have completely shifted structure now. So once that structure has shifted, I am wanting to follow that structure no matter what happens. Yes. So how did I get involved in this trade? This is the supply zone that has been created. What am I looking for next? I'm looking for liquidity. Where is my liquidity? My liquidity is at the top of this high, which is why, because this high broke this low and this got swept. That's strong liquidity. This high broke this low. So if I zoom this in for you guys right there. So if this high broke this low and this high broke this fractal low, there is strong liquidity over here. This got taken out, perfect. And now I'm waiting for my entry or this zone to be hit. Next candle, this zone got hit and it left me a nice wick. Yeah, I am even more excited. Now for me to take an entry on this one, all I did was I simply placed the stop order at the breakout of this candle, and I could have covered this high, or I could have just left it at the top of this wick. In this case, I would leave it at this wick because there is a nice wick reaction that I see. It is a long candle and we have a 5.1 pip range, which is pretty sizable. So typically, if this one was a loss, by the way, you guys can see this, right? This came in and it immediately took me out. 9 out of 10 times, if I were to take this trade, it would have been a winner. And this is where you need to trust the process, guys. If you're going to let one trade affect your belief in a strategy, any strategy, I'm not just saying myself, but take any strategy. If you're going to let one loss, two loss, maybe even 3, 4, 5 consecutive losses overbear the months of backtesting that you've done, which clearly shows an edge in your strategy, then there's something wrong, right? Because this is part of the game. We are playing a game that is based on probabilities. And it is a very high probability you might get a couple of strings of losses within the trading time. So here what happened was that price did break and gave me a reaction at this point in time, and then it took me out. For me, this does not amount to anything. If I am trading this for the next 10 years, right? This is a trade setup that I know for a fact is going to work. I've seen it a million times in my back testing. I've seen it a million times in my life, and forward testing. I did not think twice entering this trade. So that is that. I hope this one was pretty clear. I mean, this is textbook entry. So what happens next? It comes down. Obviously, it takes me out, and once it takes me out, I am waiting on the next candle right here. This is the candle. So this bullish candle is what I'm looking at, right? And I'll tell you why I'm looking this at. So now we are looking at this candle right here. So this box, which is this bullish candle. The reason why I'm interested in this candle is because look at the structure now, right? So we have been going down. This is all down structure. We went up, we had a nice reaction, and then this supply got flipped. So we have the first indication that we're going higher, right? So it has turned into a bullish structure at this point in time. So we have the first indication that this has turned bullish. Now, the thing that I'm waiting for is my zone. So my zone would be this right here. I'm waiting for price to come into the zone, and then I'm looking at, was there any strong liquidity taken? So I'm looking at this candle. This candle clearly brought the top wick of this. So that means that structure is breaking, the order flow shift is happening. This, on this 15-minute chart, this would be an order flow shift because the high of the previous candle, the high of this previous candle has been broken. So this is definitely an order flow shift, right? Now, on the 1-minute structure thing, that is a structural change, right? So now I'm waiting for a liquidity to be taken. And how does liquidity get taken? You have to have a low that breaks a high and then gets swept. I did not see any liquidity that was taken out here. So the next thing, what am I looking for? I'm looking for a battle between supply and demand. My first reaction was what? Where is price coming to and where is it reacting from, right? So price came into this, fantastic. This is the zone that I already marked, and it pushed heavily, pretty strongly upwards, fine. And then I saw the next candle close bearish. Then I'm looking at where did the price react from on the left? And the price was reacting from, so we had the zone that came in here, and this is where the price reacted from. You could have also argued that the price reacted from this buy to sell thing, but in my mind, I think this higher area, the origin, because it's a pullback, this is where it reacted from. Fine, the price reacted from here, and then it reacted into this. I am not still involved in a trade because I'm looking for buys. So I'm thinking to myself, if price breaks this high, and I cover this low, that's a 4.8 pip, I should be good, because if price breaks this, that means the price is going upwards. Otherwise, if this was strong, this should have printed a lower low, right? So I'm now waiting if supply is going to take over or demand is going to take over. So the question is, why did you pick that wick as the zone and not the whole candle? Why did I pick here and not the entire candle? Right, good question. The reason for this is because wicks, and I don't know if you guys know this or not, and you probably do, but wicks are one of the most important aspects in trading. And in this case, what happens is that when you see a wick like this, there is 100% an order block or a zone within that wick. So if I'm looking at the entirety of this candle, the absolute origin of this wick, where the order block is below this wick and this area entire here. So if I were to take this like this, is unmitigated, right? So which is why I said, let me look at the unmitigated part of it, because there is definitely something in here which will allow the price to go away and react and go away from. If I were to take the whole candle, you can, but this candle is already mitigated, right? So you had a down, you had a push up, then you had a downwards up, and it went pushed up again. There is nothing left in the body of this candle that price would be reacting to or anything of that nature. Price did react from here, but price did not react from the previous bearish candle. What it reacted from was this candle here, because this is a pullback before it went up. So if you really want to talk about this, this is your supply. Price reacted and gave me this interaction zone, right? So sell to buy wicks. This is where the interaction happened. This is the demand that pushed, made it happen. And this is where the price is now reacting again, right? So all of that has happened in my mind. I mean, I'm seeing this live. So all of that, I'm already clicking in on my mind. But if I look at this, and let's go back to replay, let's do it over here. Yeah. So we are looking at this origin start, this wick here. And if I were to go to 15 seconds, look at this. This is a clear sell to buy range, which has not been mitigated. This is the first time that it got mitigated in. Majority of the price action would be reacting from the wicks when you have that strong pull. So if I just went back to this, right? Here, I took the whole candle. If I were to show you like this, that is one zone, because price came in, reacted to this and came back. And if I were to show you this is one zone, right? And if I were to show the wick of this and I tell you the price went up and came down from that zone, wouldn't this be the same as this? I'm just not drawing full bodies. The problem is, I don't want to say problem, but the thing is that we've been taught, draw the zone in the entire candle bodies. We've been taught about drawing the whole thing on different bodies, right? So let me look at the 15 seconds charts, just to explain what is going on within these candles. Look at this. This was a wick that I drew, right? This is an order block on a 15-second chart. Straight up. Price went in and came back in. What is this? This is the last buy to sell. This is this demand chain. Where did price come in? It reacted from this. Easy, simple stuff. This would have been the entire wick of the candle, and I will show you where this wick is. Price came in, reacted, went back in, and reacted again from this. So if you were to just draw wicks and instead of the candles, you'll be just perfectly fine. But we've just been programmed so much that we have to draw full candles, full-bodied candle zones. And typically that just messes you up, because if you draw a bigger zone, so if I went to 1 minute, and I will show you this now. if I were to draw a full zone over here, it just throws people off. Like it came back in once, it went back in again, it came back in, now it's going back in again. Is this zone weak now because it has tapped multiple times? What is going on? All that good stuff happens, right? So I'm a believer when you have these large wicks. I know for a fact there is a zone in here, an order block, buy to sell to buy zone, and that is where the price is coming in to react. As simple as that. There's no rocket science. Look at this. All of these wicks are coming in to take the liquidity from the top and then, and you will see this again. I mean, I can show this to you all day long. Why did this wick, what is going on that this wick perfectly reacted over here? What's going on here? What's so special about this? Right? It could have gone here, it could have gone anywhere on the chart. But why did this wick, this candle, feel the need of breaking the top of these guys, go all the way to the top of these wicks? What is going on in here? What is going on in here is there's an order block and orders left in here, which it needed to pick up, take that liquidity, needed to pick up, and then move the price downwards. That is what's happening, right? There is no random coincidence that the price perfectly went into these wicks and came back. Why did price go into this wick, right? There is an order. Why did price go into this wick, right? Why did price go into this wick? And so I can draw this. Look at this. Perfect reaction. So you have a sell to buy interaction, and these are interactions that I typically would take if the low does not break, because these are zones that are typically order blocks on a lower time frame. So if I were to then take, let's say, go further down and break this till here so that we know where we are, and then I go to a 15-second chart, what's happening here? Price moved in, pulled back, and went in. There is a zone. This is the demand zone, right? And this demand zone is where price is coming in. If I were, and then it perfectly went away. It did not go down to fill this little fair value gap. It did not go further down, take all this trend line liquidity, none of that. Price came in, it saw this zone got reacted from this. This was the supply. So price came in, reacted, and demand took over, and that's what it is. If I were to show you this chart right here, and I asked you what time frame are we on, can you tell me? So ask yourself always this: if I'm showing you this chart here, right, and I don't show you anything else, can you tell me what time frame are we on right now? 15 seconds. This could be an hour chart, this could be a daily chart, this could be a weekly chart. You would not even know, because the candles are the same, they act the same, they behave the same. It's just in our minds, oh my God, it's 15-second chart, so there's a lot of noise in here. There is no noise. Everything is run to a precise T. The candles are reacting in the fashion that they always react since the start of these candlestick patterns come in, right? So let's go back to 1 minute. Okay, so why did I take this trade? My trade, like I explained before, was price was reacting to this, and if this is supposed to be a strong high, it would have pulled up lower low. But my bias is bullish because of the previous order flow change. Right here, the break got broken by this strong body, right? And then I'm looking for an excuse to buy. So I place this. What happens next? Price did not, so let me delete this. It came back, it did not tag me in, but it reacted again. So now I'm looking, okay, fine. This is the place where price is reacting from. Now you ask me again, and I want to show this to you again. Let me take this out, right? And I'll go back to 15 seconds. Why did I draw this first wick? Clearly a supply zone. Why did I draw this wick? This is your buy to sell, right? This is the unmitigated part, the origin part of that candle. This is where the thing is reacting from. Now I can go back to 1 minute and say, yeah, you can draw that entire freaking candle here. It completely messes up your thinking and your chart pattern. Really, I mean, what am I telling you? What is this zone telling me? Nothing. All it's telling me, the price is going up. Where are the orders? We don't know. Where is it reacting from? We don't know, because all of these bodies are mitigated. So for me to clean this up, this is where the price is reacting from. What is the name of the session separator indicator you're using? Also, could you please share the settings? So my session indicator is, this is the one. So you have your London, New York, Tokyo. I only show London and New York. And because of my GMT, you see this over here, UTC +4. I am sitting at a 3 to 5 for London and New York, 8 to 10. This translates to about 4 to 6, and this translates to my local time 11 to 2, I believe, or 1, 11 to 1. Yeah. So next, coming back into this, so I'm looking at this, and price is not tagged me in because that was my entry. It pulled away from it, and then I'm still waiting. I'm like, where is going to react from? So I see all these wicks started forming, and I'm looking at the left on the side, left side. This is where everything is reacting from, this range. This is where everything is reacting from. Yes. Once it's reacting from here, my only thing is that I will place an entry if this top breaks, and I will place it to the low over here. Right? So I'm just covering the bottom of it because this would be the strong low there. So this would be what, a 3.9 pip thing, and it got me in with momentum. So it's not that I got the entry at this point. My entry would have been here, like that. But it was because I wanted to have the breakout of this candle. This candle was a breakout, and that's what I want. So the question is, our bias would be based on 15-minute structure or last 15-minute candle. The bias is always based on 15 minutes. So the strategy is, I'm trying to keep it as simple as possible. I don't care about structure on the 15-minute chart. Okay, if you care about structure, look at this. If I were to draw a zone, and I'm looking at traditional smart money concepts right now, right? SMC, supply and demand, all that good stuff. Okay, I draw this zone here. Okay, and this is not part of my strategy, but I'm telling you this. Now, what does SMC tells me? That price has to come back to the zone. It does a structural shift on the lower time frame. You see some sort of a chalk, and then price moves up, and then it comes back into a demand zone, and then you take an entry as a limit order, right? The problem with that is that I had to wait 1 hour, 1.5 hours for price to come back to my zone. And it just never sat well with me. It's like, why am I doing this when I know that price is fractal and I want to get in and get out on a daily basis? Part of the success of what I'm presenting is that the opportunities are all over the map, man. They are multiple times. And if you go to my markups channel, you will see 3, 4, 5, 7 opportunities to trade, both on GU and EU combined. Bring in CAD, bring in USD, JPY, bring in New Zealand dollar, bring in all the other pairs in, and look at the opportunities you're having only on those 2 hours of London and New York, right? And it's not like you're sitting like a hawkeye, right? It's not 2 hours of intense focus. This is how I would do it. I'm looking at a 15-minute candle print right here. I'm looking at this. Once it's printed, I draw a box and I just wait. Right? If I don't get an entry, I put a timer for 15 minutes on my phone, and I don't even look at the charts. I'm doing my day work. Once the timer goes off, and I come back and like, okay, this is what's happening. Did it break any structure? Did it have a momentum in it? Yes, it did. Okay, fine. Let me look at it on the 1 minute. Where are my zones and what liquidity I need to take? If there is a clear liquidity, I will mark an alert on it. If that alert goes off, okay, now I'm looking at it. Did the price play out as I anticipated? If I did, I'll enter the trade. I am not staring at my charts every second, every minute. It's simple, and it's forget structure on 15 minutes. It will confuse you, and the whole process of this is to unconfuse you so that you're just looking at 1 minute, because I am wanting to take advantage of that internal structure on 1 minute, the immediate structure. I'm not even waiting on that swing structure on 1 minute. So if I look at this, if I look at 1 minute structure, right, the swing points, this low, so this would be strong. This got broken here. This would be the strong one. This is the actual low that got here. This gotten broken here. So this is the strong low. Now I have to have this high broken for my bias to shift bullish. I am not waiting for that long, man. I want to take for immediate price action right here. And if I'm getting immediate price action, I'm in and I'm out. I don't know if you guys watch cricket, or if you're aware of that game, cricket. But if you are, very quickly you can translate that to baseball as well. But in a test match and cricket, right? You play. There is a format of the match called Test Series, and you play that over 5 days. There's a team that is bowling and you're batting. Now, when you are building up your inning, you're only playing ones and twos. You're building up your inning to get that massive score. You're not going for a home run on every ball. You are going to get out. Your entire team is going to get out, and you're going to lose the whole battle immediately. So you play, you stop, you play, you have hundreds of knocks where you have no trades, and then you play ones and twos and ones and twos to get to where you want to be. Yeah, and that is the success of day traders. We need volatility and we need small price action movement, not 5, 6, 7, 10 hours. That don't happen every day. All right, guys. So I hope this trade was clear. I'm looking at the battle between the two. Now, again, I said this before in my earlier video as well. If this bothers you, right? If you're not understanding this too much, if this is overwhelming you, the supply demand story, skip it. Don't bother with it. Just stick with your the liquidity candle and your reaction candle after liquidity is taken, and you will be profitable. I kid you not. I kid you not. Right? Just follow that. We're done on London, and let's go to New York, see what is happening here.